Hello, folks. Welcome to Transition to Market Action. Dave Russell here. Monday after the Big Friday sell-off, and there's actually someone just now asking a question. The ATV. Oh, sorry. July 35 puts. I see. Yep. This was put selling in Activision, which we were actually citing as an opportunity on Friday, and which I started nibbling on. I still think that when you have these sort of drops, I have a problem with my futures chart, unfortunately. But, we're just going to kind of grouse around and chop around. I honestly believe that, we're looking at a place where the index is closer to the lows. And, I'm trying to usually come up with trade ideas that will last for a period of between 3 days to 3 weeks. And in my view, this selling is not going to continue. So I think right now we had the added aggravation this morning of the Chinese increasing the rate of devaluation of the yuan, and that's hurting oil. I was looking for oil to do better and for energy to do better, but we just got follow through selling in it. Nonetheless, I think when we look at this right here, my view, this is a range, and we're at the bottom of the range. And I tend to think a lot of people just got really surprised by this news event. And but there's really no impact from it. I mean, it's all fear and no substance. There's not a single, import or export that will not happen between the UK. Nothing changes in the actual reality of the law. I mean, nothing has changed yet. Now they're going to have a long period of negotiating, and it seems to me difficult to really imagine that we're going to remain focused on British parliamentary politics and the relationship between Britain and Angela Merkel for the next few. I mean, the market's going to lose interest in this pretty quick. And so anyway, I know it's a big surprise when you get to follow through the downside. I said when you get this drop, you want to start to look at buying the good names. We identified a lot of those. Today we have a little bit of option activity. There's call buying in Hertz. These travel-related stocks are just getting demolished. But nonetheless, this one here is holding $10. They're buying the Friday $10 calls in Hertz. And in Visa, they were rolling the 78 and 78.5 calls down in strike to the 77s. This is the last Friday of July. We look right here. They're basically buying the 77s. Looks like they were long at the higher strike. If we expand up the view here. Looks like they were long these two higher strikes because both of these were sold against open interest. Looks like it was what we call a call stupid. Sometimes you'll simply buy it 2 strikes because, the bid-ask spreads, maybe they pushed up the volatility in one, and it was a way to spread the buying across 2. We do see that occasionally, and then they basically rolled down. So this is someone who was long the stock, it pulled back, and now they're adding. But, I mean, if you look at this stock, I think a lot of these stocks, they've really pulled back to levels where I think people are looking, and I think right now when we really look back at this, I'm not going to just, whistle past the graveyard, as they say. But in my view, I mean, I've looked at these things structurally, and I spent all weekend trying to find an actual point of substance where Brexit matters, and I can't find any. It's like it doesn't affect anything right now directly. This is nothing but emotion, and that's not to say that you basically, I basically am always looking at investor sentiment. But in my view, this is something that this was a shock as opposed to a long-term sentiment. If you look at a stock that's been going up for a long time, like Activision. Today in Activision, we have the 35 puts of July sold. This is a stock that has a long-term bullish sentiment. But you can get very short-term swings in sentiment, and I think that's the bigger thing is that once this initial shock goes away, I do think that we're going to see more of a turn the other way. So, our original thesis going into this was looking for SPY to pull back, or the S&P to pull back to 2,000. It's exactly what we got, and I think it's time to be buying. And I've been doing that. I've also bought today CA. This is a great software name that we had identified a while back. It had a great run, pulling back to these old highs. It's just drifting around here. This stock is not a really fast mover. Another one, look at Agilent Technologies. Here we have a company that's had, medical devices and stuff, has had a great run, some good earnings. Now it's pulling back to old support. Another one is here's one that one of you guys pointed out to me, and it's coming up today on Research Lab. So I want to show you. This is like a scanner that we have on Research Lab. Actually, it's one that I've created for myself. I'm going to share it with you guys into the chat box if you want to take a look at this. But look at this scan I just shared. Let's see if it actually publishes to you. This is basically a thing that finds stocks that have been trending higher that have pulled back. And, COT, now this is a beverage stock, consumer staple stock, not a real highly traded name, but it's been a great name. It's shown some really good volume and stuff, kind of like Dr. Pepper, which, by the way, has really not suffered in this. This stock is, look at this. I mean, this name has really not, this has been impervious pretty much. And we had identified it here, and, it chopped around, and I actually got stopped out of it. I'm not always super good at exactly, doing the risk protection, but I did point this one out in the pullback to 92, and I think that these can be difficult to time, but we saw a big influx of money into consumer staples on Friday. Hormel. Here's a name that basically had this huge reversal. This one's gotten beaten down, but this is a monster over the long term. Tyson's had some interesting turns as well. So I think the consumer staples have been coming back to life, and we could see money coming into these. Then take a look at COT, which was just an awesome name. Now it's pulling back to a lot of support, the 100-day moving average. Another one that I bought today was F5 Networks. This stock had been rallying on the on takeover chatter and good earnings. We initially identified it as a buy somewhere in here. We didn't expect a takeover chatter, and we got it, and then it pulled back under 110 near this support level from March and April. I was buying FFIV today. Some other ones that I'm not buying, but I'm looking at is L3 Communications. I mean, this stock had an incredible breakout and move. I mean, this was one of the tightest ranges in a long time on anything that I'd seen, and it had this bullish ascending triangle down here back in March and April, and then it just launched higher after good earnings. But now it's pulled back pretty well. It might chop a little bit lower. It might get a little bit closer to the 50-day moving average. But this stock has been very bullish. It's not on a lot of people's radar, but it's a transformation story that basically seems to be really changing their business around. If you read the numbers they put out. So this is another one I think to take a look at. Danaher, this is just one of the great names that no one ever talks about, but it just keeps going up. And we had some good paper in it a while back. Here it is, first pullback to the 50-day moving average really in many months in this one. And another one, this one also might chop around a little bit more, but Electronic Arts down to the 50-day moving average near the high from January. So like I said, with a lot of these, I feel like right now, a lot of these are stocks that when you really think about it, something like Brexit, it's bad for the financials, and they're probably going to have short squeezes and stuff, and now it's filtering through to energy, which I did not expect, and I have to admit my idea of being long energy was not a good one. I thought energy was going to do better than this, and I think that the Chinese news this morning actually snuck through and hurt it. Right now, that remains the main thing I want to watch out, but I tend to think, if anything, that the energy was something that will probably I'm hoping it'll stabilize. I bought some energy stocks and it didn't work for me. But I still think that it was something that was a bit of a forced liquidation today, especially after the Chinese devaluation. SJM is quite strong. Wow, I haven't looked at this one in a long time. Let me make sure you go back and have the earnings on that on SJM. Look, they had some kind of news recently. I'm not sure what that was. These are very strong. What do I think about Disney? I do not like Disney. Never have. Well, I haven't for a long time. I shouldn't say never have, because there were times we were bullish on it. I still think Disney's done. I think that the great run that we had in Disney years ago is finished. I think the stock is just tired, and there's nothing good happening with it. I think that their chart is losing momentum, and I think their business is clearly losing momentum. Television is just, it's over the hill as an industry, and this is basically, a television stock for the most part, a broadcasting for the most part. They have parks and stuff like that, but I think Disney now is looking pretty ugly, and I would avoid it. Should we hold the puts in Western Union? I'm not sure. I mean, this stock here, I mean, to be honest, I think it's not very bearish. I mean, I would tend to think Western Union here is probably going to hold its ground. I'm not really sure about this one. I haven't looked at this in a long time. Do I think CBRL can keep going higher? I haven't looked at this in a long time. I would say probably not. There's been a little bit of concern recently about fast food stocks, casual dining, consumer staples, all that. I would be wary of this just because it's run a lot. I mean, I would tend to think that a stock like this this stock just shouldn't move this much. I know it's been a really nice one, but I mean, it can keep going, but I think it needs to pull back here. I would say at least wait for a pullback in CBRL under 160 toward this kind of 155 level. The high earlier in the when was that? Not very long ago. The high earlier in the year, back there in like April. What is my opinion of Oracle? We've had some good paper in it, and this name started to turn, but then it just got thrashed along with everything else. I got to say, I think Oracle is great here. Holding 38, it had good earnings, it had some paper, and then Brexit happened and it got slammed. But here it is at 38. I like Oracle right here. Is Allergan a good stock for a bearish option spread? I don't know. There's a lot of event risk happening in this. I would tend to think maybe a little bit more to the downside. I don't really have. I think this stock it has some lines here that go back many years to 2014. I don't think this is really going to have a lot of continuation to the downside, to be honest. I think this is a good name that's probably basing out here. I mean, I think it has maybe some modest downside risk, but no, I don't think this is a bad stock at all. I think it's a good stock that got beaten senseless. We said to not buy it after this, when it was falling here. I remember saying don't buy it yet, but that was like 3 months ago, and I think this stock now is starting to really base out. I would be looking to buy it, to be honest. I mean, I think it could easily go back to 200, and you could have a very short-term sort of downward trade in it. I mean, it could easily do that. I wouldn't say just to buy it here, but I would be looking more, if anything, for for this to be turning more to the upside. I'm not sure really what to say about it because I don't think it's going to go down a lot more. I like to look for stocks that are really bad stocks that are going to get crushed, and I don't think this is a bad stock. Do you see the market in a correction? No, not at all. We have all these longer-term technicals remain bullish. That doesn't mean we go to new highs. I'll be honest, I would not be surprised if this part of me thinks that we could be seeing, the market topping out in terms of the move over 2100. I think that we're going to rebound back at least to 2050 sooner rather than later. And I say that because this is way oversold. I mean, I normally don't use Bollinger Bands, but if we actually take a look here, if I can add Bollinger Bands to this chart, I'm going to actually, I'm going to go to Studies, Select. I'm going to remove one of my moving averages just so I can, because I already am maxing out my studies. But we go to Bollinger Bands. I mean, I don't look at this a lot, and I'm not a person who says things are overbought, oversold, and makes decisions based on that. But I still think you got to realize from time to time. I mean, this is a massive, outward move. And in general, when things really go this far out, and then you have a flat line, and then you have, what, in my opinion, is just an event that just doesn't make sense. It's a fear thing. And I'm not saying that it doesn't make sense we're down. What I'm saying, though, is to expect this to be something that in 2 to 3 months we're talking about, as aside from just any other news story like, oh, there's a Senate race or something, or, Gordon Brown is whatever, or whatever's happening in Britain. That's all it's going to be in a few months. And it's going to be, all right, Britain just struck a trade deal with Germany. Okay, yippee. That's what this is going to be, I think. And I think for this target to now, the thing is the economic data has actually been weakening in the U.S. The jobs report last time was bad. It's terrible. Durable goods on last week were bad. Tomorrow we're going to get revised Q1 GDP. I'm not really sure how important that's going to be. But what I'm thinking now is we have ISM on Friday, and then we have the long holiday weekend. Then next week we have non-farm payrolls. So, I think we're at a point where we might really be seeing a continuation now of the slowing in the economy. And the problem is that if we get further upside in the dollar index and weakness in energy, then I think we're looking at a recession. And I think that's the main thing I think that's what you should be thinking of. But for the next, in my opinion, that's a story for 3 to 4 weeks from now. And the story for the next 3 to 4 days from now, I think, is markets oversold and will rebound. And I think it will ultimately end up as something more along the lines that the U.S. economy really seems to be kind of, slowing down without a lot of sense of anything good stepping in to fill the gap. And I think that's really the bigger narrative that's going to play out. So for me right now, this could be, I don't want to say it's the beginning of a correction, but it could ultimately turn out to be. If we get confirmation of the weakening economic news later this month, or I should say in July, yeah, then this very well could be the start of a correction. But even then, technically at this point, we have to see more things happen technically on the S&P 500. So let me actually just fix my charts now. Go back to studies, select, and we're going to remove Bollinger Bands, and we're going to add a moving average. We're going to add my 5-day moving average again. Okay. All right. Would I buy BCS here? No way. I just don't see. Look, you know what? Maybe, because like I said, this whole thing that's happening, I think, is overstated. I haven't really looked into these. I just don't know. To me, this is something that I don't understand. What is the trade? Is it a currency trade? Is it a political trade? Is it a fundamental trade? Is it a dividend trade? I don't know what it is. I could actually see that Barclays is probably at a point when it's probably it's probably at a point where the next dollar is higher as opposed to the next dollar is lower. But I don't really know I can see a rebound in this, I'll be honest. Because I do think that the overall market is more likely to rebound. I think the pound is more likely. Here we have some currencies here. This is the pound against the yen. And if you look at it, it's obviously down, but it's holding this low this is a big sell-off. This is the hourly chart. It's holding this low from last week. And, I think when you look at this, if this rebounds, yeah, I think Barclays is going to rebound. So if you like to catch falling knives, and it does work sometimes, this is probably a good one. I don't like to do that myself. What sectors have the most value, in my opinion? I don't know right now. I'm really not sure, and I have liked the software names a lot. Maybe some of the medical equipment names. I really think Agilent is good here. Medtronic. Actually, Medtronic here is, I think, a great pullback in a name that was doing very well. I'm going to add Medtronic to my list. I also want to point out McDonald's has pulled back to its 200-day moving average for the first time since it started on this great run last fall. And I think this is interesting. Obviously, a big European component in this name, but I think you're looking at a stock like this now that when you consider its exposure to Europe, it's really not down very much. All right, some of the other unusual option activity. There was put selling in ESV. They were selling the July 9 puts. This is something that's just near a low, and I would never mess with a falling knife like this, in my opinion. Prudential, they're rolling the calls. Let me look on the activity log here. Prudential, actually, I didn't write down the initial month. They're rolling the Prudential calls into AUG. So I think they're basically going here from the July 75s to Aug 75s. Let me correct this. See, the thing I say about the software names, I've liked these overall, and I think there's a lot of momentum in some of these software stocks, especially CA and F5. And it's not exactly software. I like these the most. And the problem with something like Accenture is the last earnings report wasn't all that hot. 110 is a nice level on this name. I think when we look back at this, I mean, this has been an incredible stock. The problem is if we are going to start to talk about recession, this stock is going to have some trouble. It's going to be exposed to business spending and stuff like that. Nonetheless, I think this stock digging down under 110, I think this one's pretty interesting here, something like Accenture. This doesn't trade very well, though, I have to admit. This is a really kind of just, choppy, not very clean trading stock. But it's been an awesome name, and some of these software names I still think have been looking pretty good. Some of them, like Adobe, though, I mean, these guys didn't have the best earnings. And, Adobe here kind of pulling back. All these, I think, are due for something of a rebound. I'm not sure they're really going to continue. I also continue to like Bristol Myers, and I think, holding 70, holding those old highs of the 50-day moving average, I still think this is a great name here. And, I think the healthcare, we might actually see money just going back to healthcare and going back to consumer staples. Let's take a look at energy because, it just triggered an alert on USO here. And let's see if I can get these futures working. This really is looking to me like the biggest problem right now in the market is this. I did not expect this kind of drop in oil. And I said that if this works lower, this is a problem for the S&P. And if this continues lower, then this market will continue under pressure. And I said that we wanted to look for signs of it bottoming in terms of the S&P, and it's not clear to me that we're necessarily seeing that here. So I think right now, I think that the good thing to do is to buy good names and then to wait for the overall market. But I'm wary of energy here, I'll be honest. This is, I think, something that could actually, drag us lower. Some of the other unusual option activity was NVIDIA. This is interesting. This has been a name everyone has loved, and they're doing a put ratio spread in this. Now, this is interesting because they bought the 37s of January, and they sold twice as many of the 30s. So basically, they're saying, I want to hedge down to 37, which is coincidentally is pretty close to its highs before it broke out in April or in May. And, so this is basically, if it goes under 30, they're going to be a buyer of more. So, this is basically someone who probably owns the stock and is now looking to, to hedge. And also, if it goes under 30, they're going to buy more. So if you're long a stock and it runs up a lot, you can use the ratio spread as a way to protect while also programming an entry on the deeper correction. There's put selling at ACHC. This is, I think they make hepatitis C drugs. They are selling the AUG 50 puts. There's put buying in RBS, which is obviously a British bank. The AUG 6 puts were bought in this name. Looks pretty similar to Barclays. Charles Schwab has puts rolled. The July 25 puts to the AUG 20s. The financials to me here are, this is another problem because, there's a lot of things where fundamentally these stocks have really fixed themselves and improved. But, now we're looking at the prospect of interest rates weakening or going lower. We have right now the 30-year bonds are down to their lowest yield in a long time. It's lower than 2008 on this. I haven't even looked at this in a long time. This is a 30-year bond yield index. We're down to these levels from, there was this level, let me see, I'm sorry. In early last year, and this is going to hurt the banks a lot. So I think financials right now, you're probably going to get some short-term squeezes in them. And if the market starts to bottom and we get a rebound, you're going to have a couple of days where the financials are going to go spiking higher. But I think overall they're a pretty ugly space now. I liked them when they were kind of holding support and working up this line, but a lot of things have changed now, and with Brexit, we're looking at a pretty different situation for the banks and financials. These guys are now at a point where there's going to be a lot of risk hanging over them. Starbucks reports earnings soon and they're rolling calls. Starbucks has the 22nd of July 56 calls rolled down to the 55s. It's actually a call spread, but the volume is below open interest, the higher strike. So it looks like they're basically just moving the position down, maintaining a certain level of delta. It shows up as a vertical, 55, 56. 55 is bought, 56 is sold, but volume is below open interest here at this higher strike. Barracuda Networks. This is one that's interesting as well. CUDA. Another one of these. See, I haven't looked at this one in a long time. I don't like this chart very much. But they are selling in this one the July 12.5 puts. Really don't like the look of this. This looks, that falling 200-day moving average look kind of menacing to me. Okay, let me take a look at some of the other questions here. Gilead at a 52-week low. I don't like this stock at all. There's just something totally wrong with Gilead here. I don't know. I think a lot of people, they just thought it was like, the safest. They thought the stock can never go under 80 or something, but I would totally avoid this. I don't know what their business really is, but there's something. I obviously know the hepatitis C drugs, but there's something wrong with this name. I think if you dig into the fundamentals, the bigger thing is the chart tells you. And if you look here at this level, we liked it here just based on the technicals, but then pretty much ever since, we said this is not something to buy on the pullback. Not when you have this kind of ugliness and this kind of momentum working to the downside. Southern Company, and this is a utility stock. The thing about utilities is it really comes down to what do you think about oil, what do you think about treasuries, and utilities here are going to basically just go obviously the opposite direction. I'm just looking at oil on my other screen. I don't know. The thing is it's nice to have this at a high and everything, but I think you have to just decide right now, what do you think the S&P is going to do? I would tend to think that the utility stocks are going to actually continue to outperform because I think right now, I don't know if interest rates go a lot lower right away, but money's going to stick with these, I think. This is probably going to chop around and push a little higher. A lot of this, though, I think we've priced. To me, the thing is, I still think that we're more likely that we've pushed to one end of the extreme here, and I think the question is really, in my opinion, have we reached one end of the extreme? And that is something like on the bonds, these are just at a very high level now, and the thing is if the S&P is going to hold its level here and rebound, bonds are going to come down and utilities are going to lag. If you think the S&P is going to just continue to break lower, then I think utility stocks are good. I don't know of those two things. I've just seen this for a long time, is that when people make decisions based on irrational fear and you're at support, it's never when you want to sell. And I think right now, buying utility stocks is similar to basically selling the S&P. If the S&P reverses here, you're going to see bond prices fall, bond yields rise, and utilities are going to suddenly go from being the best to the worst. So I'd rather say do nothing than buy Southern. Coca-Cola. I don't know. I think this can go down to 42. It doesn't really have any clear. It's nice to have the 200-day moving average and everything, but the 50-day is falling on this now, and the 200-day is something, but I don't really know if this has a lot of anything particularly positive happening in it. It has something of a triangle here that it broke to the downside. Depending on how exactly you draw this, there is some kind of triangle here, especially you can see it here. This could have a little bit of modest upside, but I tend to think that you're going to get this at 42. KO. AMAG, biotech stock. I think you want to see it. I'd wait for the moving average to go a little bit more bullish. Let the 50-day go over the 100-day or something like that. let me just see. Do you like beer stocks for the 4th of July or food? I mean, the problem with the beer stocks is they tend to be multinational companies with a lot of currency risk and stuff. Um, I think that's kind of far-fetched, to be honest. Um, I would say anything you should like the beer stocks because consumer staples seem to be benefiting. The consumer staples are definitely outperforming today, and they'll probably continue to do so if there's economic fears. So I think beer stocks make more sense on that. BDX, this is a medical supply company. This looks like to me it could keep pushing down closer to 160. I don't see any reason to push into it yet. I mean, it doesn't move. I mean, this stock really doesn't move very much. It's probably worth buying here as long as you're willing to. I mean, it might keep going down to like 156. I mean, it could keep grinding lower. It's one of those things where it's bullish, and this could be a place to buy half, or it could just hold here. I think it really has two support levels. It has support level at the late April level, and it has support level in the December highs. And either of those two could be the places where it decides to hold support. Microsoft is weak. It's near 3% yield. What do I think? I don't know. Microsoft gap lower. It then failed to gap and continued lower. To me, this is terrible. I don't think you want to touch this stock. I mean, it's not going to really go against the market too much, but this is just a bad company. I'm sorry. I mean, nice idea trying to change your business, but they're not getting it done. And I don't care what anyone says. I think their purchase of LinkedIn is ridiculously ill-conceived. I mean, they're supposed to be a software company. Now they're trying to make themselves into a social media company. I think it's going to be like AOL Time Warner, and I have no idea who thought it's a good idea. I don't, to me, it just doesn't make any sense. And you're not going to force people to use software by getting on LinkedIn. These are different businesses. This sounds to me kind of like the idea, well, let's combine Travelers with Citi, and then people will buy their insurance and their banking. No, people buy different services differently. And I don't see any synergy between their businesses, and I think it's a terrible sign of desperation. So I don't like Microsoft. What do I think about lithium? I don't know what lithium is. Can you give me a ticker, please? We're going to get charts past 20 years. Well, I often use this thing called TradingView. It's not a brokerage or anything, and this has got a lot of cool charts on it. You have to create an account, but you can do it for free. I think this is a pretty cool service. I use it for currencies mostly. At what point does HFC become a buy? I really don't know. Right now, the refiners are just very broken. They haven't really given any signals that they want to go higher, and it seems like something just is not working in them. So we had call buying in Western Refining. It worked for like a few hours, and then it got slammed lower. I would say this. It's like I have not really been following super closely all the stuff between Brent and WTI, but something is just not right in the way this is working. There seems to be a glut of distillates, and I don't see any reason to be moving into these. If S&P turns up for other reasons, utilities would be a great short. No, I don't think utilities are a great short, and I also don't agree that healthcare would drop on that. I just think the utility stocks would just kind of lag, but I don't think you'd want to be short the utility stocks given the interest rate environment. I think if the market turns, you just want to be long SPY. You want to be long, maybe financials, but it's not going to last a long time. That's the problem. I like buying stuff that, if I hold it for where I have a greater benefit of making money over a period of several months, things like these stocks. I think these are better looking to me than, stocks that are coming off lows. I mean, Barclays could jump $1 and then it could be right back under 8 again. So, this sort of thing to me is tricky, but I don't think you want to be short utility stocks. I just think you don't. I think if you miss the move, then, I think that there's a lot of other ways to look for this. I mean, it's breaking out here, but, this doesn't move very fast, and I would not be surprised if it's going to consolidate at $50 the XLU for a good period of time. I'm just looking at some of the other questions here. Do I like Hormel? I'm not sure what to say about Hormel. I think I found this bullish engulfing candle on Friday that was extremely interesting to me, but I don't know exactly right now if I would say I like it. I did not recommend it. It has a lot of bearish momentum, and I would not be surprised if it chops back in this range for a while. But I think it's interesting that we're seeing strength in the consumer staple stocks. They were dead for a long time as oil rebound. What do I think about ABB? Well, it was an economically sensitive stock, but now it's pulled back to support here. This is probably going to be a point where it bounces. I would tend to think this is probably a place, if you like ABB, to be buying it. And the other thing I'll just say is, it's kind of interesting that the euro and the pound both got crashed, both got destroyed heading into the into the biggest holiday season. So, if you're in the United States or Japan, suddenly got a lot cheaper to go on vacation in Europe, and I think that's just kind of interesting to think about. This whole thing might not really be as much of a crisis as people think. CLX, Clorox. I'm pretty sure that, was it this one or was it Colgate Palmolive? One of these we had recently recommended on a breakout, and it was this one, and this one actually has pulled back. CLX. I mean, this is one I think, this probably is a stock that, if you look for, when are the earnings? This is probably going to be one that makes sense with something like the August, like 140 calls, looking for it to inch higher into earnings. It'll probably keep running into earnings, and I think that's probably the way you want to look at something like this. LIT is lithium. I don't know what this is. It sounds like some ETF. I'm sorry. I don't know enough about this. I'm going to have to pass on this one for now. How far can O go? This is a realty trust. I mean, it's breaking out here at new highs. I think something like this can just keep edging higher. But these stocks don't move super fast. And waiting for pullbacks in them always makes more sense. The other one I've liked and it's doing decently is Store Capital. This is one I think is another interesting name that has a good dividend yield. Do I have an opinion on GDX? My one concern about GDX is it seems to be trading the opposite of the S&P 500. So if you think the S&P here is going to bounce, I would not be surprised to see it kind of move the other way. So I'm just trying to watch this on my other screen. I'm a little bit wary here because, we have the dollar index is up so much here. I don't have an opinion on this. This has become the most traded instrument, it seems like, in the whole market. This is like the new Apple or something. But if you look at this candle here, it doesn't look actually very good to me. I had this total rejection on Friday, and then today with the market down, it should be up again, and we basically have a non-confirmation. We have that big, open at a high, fail to hold the high, and then the next day it's down again. We've actually seen this before, and I remember one time, I'm not saying you want to be bearish on it, but we had it right here, that's right, in March, and basically we entered a period of consolidation, and I would not be surprised if we see the same thing again. So, see, it made a new high this one day, and then it reversed, and then it was down, and it continued down for a while. So I think GDX here is, I think you're better off waiting. I think you're going to get GDX closer to 25, or at least under 26. Will CMI come and stay in the trading range? See, this is economically sensitive and a cyclical name, an industrial name. Transports are weak today. I don't know I don't trust this stock at all. This could, I think it'll go to 100 and then probably hold, but I don't like this stock at all. It's a failed bullish triangle breakout, and I don't see any reason to be buying it yet. The thing about a company like CMI is it's broadly exposed to the economy, and then you have other stocks like like Accenture and CA, these software names. This one was recently added to conviction buy at Goldman, although I'm not sure exactly if it's a buy yet into it. I think these are names that are in a much stronger position. They've been outperforming the market. They have stronger growth stories even if the economy goes into a small recession. These stocks, I think, have a stronger story behind them. So I'd rather be looking at the software names and stuff instead of the industrials. The industrials have way more macroeconomic risk, and transports have really been lagging. We look here at the IYT. This is not a pretty pattern at all that we've seen in this. So I think right now the transports have risk in terms of economic risk, and I think they also have risk in the fact that the airlines, I think, are just continuing to suffer under excessive capacity, and I think they're absolutely to be avoided. And all that's going to weigh on the transport. And the other thing is, I haven't looked at the railroads recently, but I have to think that this Chinese news is bad for the railroads. So I think right now transports are looking pretty bad. And, folks, we really might be at the beginning of a real recession here. We might be at the beginning of a correction, but it doesn't mean that the next week is straight down. In my opinion, this market does not yet have the technical setup for a sustained move to the downside. The 100-day is over the 200-day. The intermediate, longer-term momentum is still bullish, and it doesn't mean that we have to make new highs. But what it means is we have to let that bullishness die. And if we are going to have a correction, you're going to see the 50, the 100, and the 200 all come together and then break lower. And the 50 is all the way up here at 2080, and the 200 is down here at 2020. I think right now we're going to be, between 2000 and around 2120 for a while. And then the question is, how will we resolve that price action? And I would not be surprised if it's lower. I really wouldn't be. KKR. Like I said, the durable goods numbers were not a good picture. And if energy continues lower here, like I said, it's going to suck out more strength from that isn't part of the economy. The consumer, the industrial capital goods, the manufacturing side, and the energy jobs. What do I think about Tesla? I think Tesla is kind of like Microsoft. It went from being a company that had a good CEO to a company run by someone who's a little bit confused. This is also, I think Elon Musk did a lot of harm to his own reputation with this purchase of Solar City. I don't know what he was thinking. That was one of the strangest things I've ever seen. I'm not sure how a company that installs solar panel on houses has anything to do with making automobiles. And I think the market's perfectly aware of that. I tend to think that this name now is getting ready. I would not be surprised if this stock, here's the thing. Right now, it's probably going to hold around here and kind of rebound. This level, there's a lot of levels here if you look at the longer-term chart of Tesla that this is holding. Just start over with this chart. Way too many lines. See, there are definitely reasons to say that it will hold here. But I think when you look at this, this is now getting more bearish. The 50 days about to cross to the 200-day. And don't forget, when that happens, it's going to start triggering alarm bells everywhere. We had a golden cross, and then 2 months later, it turns into a death cross. That is not good. I think this stock goes up maybe I think the next level you want to watch is just right here at the May low around 205. And if it fails, it's in big trouble. And a lot of these big NASDAQ stocks, they really have been breaking down. Netflix doesn't look very good. Google looks pretty lousy. I think Amazon is even getting tired here. No, Amazon still looks okay. I think Amazon's probably a buy here, to be honest. But a lot of these other big names in the NASDAQ really don't look good. And Yeah, I think that's a problem, and Tesla is one of the big Nasdaq names, and I'm definitely seeing when you look at the Nasdaq here. I mean, this made a lower high recently. This actually seems to have a now. I mean, I look at the S&P. I don't try to basically, for me, the Nasdaq. I've seen it when the Nasdaq looks like it's going to just crash, and then it struggles back because and then it suddenly comes flying back because the S&P is strong. I believe the S&P will lift a bad Nasdaq, and I don't think it's necessarily the other way around. I think the S&P is everything, and the other indexes follow, in my opinion. Now, other people don't agree with that, but it is my approach, and I've generally found it to be true. The Nasdaq or the Russell will predict crashes that never happen, but the S&P will tell you. And in my opinion, right here, the Nasdaq is looking pretty bad. And the question is, if the S&P does stall out, we're seeing this, and a lot of these different names are not looking good. And I think Tesla is one of those. I mean, Apple is. Let's have a look at this one, because I haven't looked at Apple today. The Nasdaq's looking pretty weak to me here, and I think that this is overall not a good thing. But it also doesn't mean that the market is going to just continue lower immediately. Facebook, another one that the Nasdaq is going to be hurt by the Nasdaq here. This is another bullish ascending triangle that's broken to the downside. Biotech seems to be doing the same thing. So these look to me like, look, I don't really, like, here's the thing. If the S&P had a falling 200-day moving average, I'd be saying the market's about to go down, these stocks are breaking down, and we're just going to crash. But at this point, I still think that the intermediate term technicals on the index are not ready for a big drop. So for me, I think Facebook's probably going to hold here, chop a little higher. But you know what? Facebook is another strike against the Nasdaq, because all these stocks look the same way, and they all look to me like they're really tired. And so I think right now, Facebook right here, I would not be surprised if it rallies back, because it's got a lot of support here around 110 from October, and it could kind of just struggle its way back up. But I would look at anything for a modest rebound, but not look for anything much past 115 in Facebook. All right, folks. Well, I got to jump. KKR was the last question. I don't know enough about this company. I got to say, think it's going to, it looks to me like it's in big trouble technically. It's got a bearish descending triangle. I've been pretty bearish on, Blackstone. Let's take a look at that one next. But let's take a look at this. See, this has got something of a bearish descending triangle here that I think is, but it could also rebound a little bit to 13 first. So I don't really see anything really clear in this one. Let's take a look at Blackstone, because I think this is one that, this stock to me is looking, I've been just saying all along that this one I think was just, this is in trouble. And I got to say, if energy continues lower, this stock is going to get just destroyed. It never really had any kind of rebound. It's a financial, and it's exposed to energy. Folks, I got to jump, but remember now, we posted a summary sheet on market action on the website a little bit after. And, if you want to be added to my morning distribution list, please email me at david.russell@optionmonster.com. And then also, tomorrow we have revised GDP, the final reading for the first quarter, the Case-Shiller Housing Index, and consumer confidence. Oil inventories come out after the closing bell, and Carnival reports earnings, followed by Nike after the close. Hope everyone has a great and profitable end of the trading day. We'll be back tomorrow. Take care, folks.